I'm here with Rob Booker of Interbank FX. Rob, thanks for joining us.
Thanks, Tim.
We hear a lot about commitment of traders reports. A lot of traders seem to be following this these days. What is it and how do you use it?
It's certainly getting a lot more attention than it used to get. And it's simply a report that kind of shows the difference between trading positions taken by the speculators, define those as you will, and sort of the commercials. It's the commercials versus the speculators. Traditionally, there have been terms thrown around: smart money versus speculative money. I'm not going to use the other adjective. Bigger money versus smaller money, short-term money versus longer-term money. I mean, these are all analogies. And it's a report published about the balance between the buys held and the sells held in the futures markets, expressed in currencies, commodities, grains, everything, precious metals. And it's a report that comes out once a week, and it's basically showing this balance between the buys and the sells. And sometimes what you'll see, Tim, is that you'll see speculators loading up in the market at the final parts of a trend. And you'll see commercials dumping off currencies or commodities late into the trend. They'll actually be, by the end of a trend, in many cases, those commercial positions, that bigger money, will actually be reversing its position completely, and it'll be completely 100% in the opposite direction of what the trend was.
Is it helpful to you as a trader? Do you use it to find opportunities yourself?
You know, I think that no one tool is a holy grail, but I think if somebody's interested in futures and commodities, and in particular Forex, I think it's definitely, especially for longer term traders, it's a completely useless tool, I think, for the short term, because it comes out on a weekly basis and it's telling you something that's already happened. But in the bigger picture, you do see cycles where commercials will load up and be sort of net long by a wide margin, and speculators will be net short in the opposite direction. And what you start to see, it takes maybe 1, 2, or 3 weeks to play out, but you do start to see turns in the market in some of these massive trends at those points of exhaustion or at those points where they've built up. The problem is, those commercials can be built up long. They were built up, for example, long on the dollar, long before the dollar turned and started becoming a bullish currency again. They were like long at 150, 155. So these are longer term plays, not for the faint of heart, but certainly if you want to see the bigger picture, the COT report is definitely one place to go.
And you would argue that maybe you could see what the smart money is doing, so if I'm against the trend, maybe that would tell me.
Right, they could call you to find out what the smart money is doing. You interview all the people, right? You know what's going on. You got your finger on the pulse. They could consult Dionne Warwick and the Psychic Friends Network if they want, or they can actually see where the money's going. Now, I just think that maybe it's not going to help you in the super short term, but I think, as far as I'm concerned, I'd like to see where the money is actually going. And because it's all sent through an exchange, it's just numbers. It's not speculation. It's not guesswork. It's not making a phone call to a desk on Wall Street and saying, are you long or short? It's the net positions, long or short, that these commercials or speculators are taking.
Great, good information. Thanks, Rob.
Thanks, Tim.
You're watching the MoneyShow.com video network.